Whenever the market falls, it feels like we need an explanation immediately. The news starts searching for a reason. Interest rates, inflation, politics, a weak economic report, a comment from the Federal Reserve, or sometimes a single company's earnings report. By the end of the day, the decline has a story, and the story often sounds very convincing, but I have learned to be careful with these explanations. Because the market is made up of millions of investors, all buying and selling for different reasons. Some are taking profits, some are reducing risk, some need cash, some are reacting to news, and some are simply following the price. There is rarely one clean explanation for everything that happens in the market. But uncertainty is uncomfortable. We prefer a simple story. The market fell because of this. The market rose because of that. A clear explanation makes us feel like the market is understandable and maybe even predictable. But sometimes the explanation comes after the price has already moved. The story does not always cause the movement. Sometimes it is simply attached to it afterward. That matters because dramatic explanations can create dramatic decisions. A normal market decline starts to feel like the beginning of a crisis. We sell strong companies, not because the business changed, but because the story frightened us. I'm not saying market declines never have real causes. Sometimes the economy is weakening. Sometimes company fundamentals are getting worse. And sometimes risk is rising. But before I react, I try to separate the explanation from the evidence. Has anything changed in the business I own? Are earnings, cash flow, debt, and long-term demand getting worse? Or am I reacting to a story created to explain one difficult day? The market does not always move for one simple reason. And not every decline needs a dramatic response. Sometimes prices just fall. And the best thing an investor can do is stay calm long enough to understand what actually changed.